In times of economic uncertainty, it's really easy to get sucked into the doom scrolling and just the horrors of the red numbers on a retirement account. I think it's totally normal to react by wondering about our current investment strategies, what's going to happen with the stock market, the housing market, the travel plans of people, and whether they're going to spend in a recession. Should I change something? Is there something I need to learn? But the panic doesn't really do anyone any good. So in today's video, let's focus on what we can do. And let's talk about ways we can 1. De-risk, 2. Double down on good foundational financial habits, and 3. Set ourselves up for success when opportunities do present themselves. And also, if you are watching from the future, how are we doing? Please telepathically send some reassurance. All jokes aside, let's talk about de-risking. Tip number 1 is to review your debt structure and get rid of any high interest debt if possible. Most of us, especially if you're investing in real estate in some form, you have some form of debt. Whether it's a mortgage, a car note, student loans, personal loans, maybe even credit card debt. Make sure you know the terms to all the loans and debt that you have. What is the interest rate? Is there variability to this interest rate? When will the debt be paid off and how much is left? My personal rule is absolutely no consumer debt, meaning no credit card debt, no personal loans for any random reason. Whatever you have that is high interest or going to balloon soon, try to find a way to pay it off as soon as you can. Even if things seem okay right now, in a time of economic uncertainty, if interest rates go up, if inflation continues to go up and your expenditure is higher, if you have a loss of income, things can really go sideways. By paying them down, you're reducing the risk that you would somehow be backed into a corner with very little optionality in case things do go south. The second tip is to build a strong cash buffer. Have at least a ballpark figure of how much you need per month to keep the lights on in your house, in your general life, to feed the kids, to go to work, to maintain your normal status. And also take a look at what that number looks like for your real estate properties. For example, if you have an Airbnb, if no one books it, how much does it cost for you to keep this place operational? The reason you need to know this is so that you can build a sufficient cash buffer in case things don't go well, in case you lose a job, in case your Airbnb stays vacant, you have the right amount of money to keep it afloat for an amount of time that makes sense to you. For me, 6 months is a good amount of time. Obviously, take into account your risk appetite. Do you also have a family like I do? Generally, the more risk averse you are, a bigger cash buffer would make sense. Think of it as a safety net that gives you the freedom to strategize. As far as how to build a sufficient cash buffer, obviously, you first need to know how much you're spending per month in your life, in your business, wherever. And you can do this by looking back a few months of your records and seeing what has your pace been for spending on utilities, on food, on groceries, on repairs. After you have figured out how much you would need for 6 months, then I would open a high yield savings account for the personal stuff, or for business things, find a business checking account because you want to keep it separate and have it be one that offers reasonable interest. I personally have separate business banking accounts for YouTube stuff, for my long-term rental, and then for my beach house. They are all completely separate from each other. And since I already use Baselane for my rental properties, for collecting rent, for bookkeeping purposes, it's really easy to go in there to add a virtual savings account for example, like a security deposit that I'm putting aside, or my special emergency fund for my beach house, a special emergency fund for my other rental that is separated from the main cash flow accounts. I don't look at it as much, and I just don't touch them. If I have money that's just gonna sit there, it might as well be earning me some interest, and Baselane has pretty competitive APY. Right now, they're actually offering $100 to anyone who signs up for an account and deposits money using my link below. So if you're looking for a business banking solution and a place to park your business-related money, highly recommend checking out baselane.com/Lydia, and thank you to Baselane for sponsoring this video. The third thing I'm thinking about in terms of de-risking is increasing the optionality of my investments and optionality in my life. I think of it as kind of a built-in backup plan in case demand shifts, in case circumstances change. I am prepared for a plan B. If you currently have a short-term rental property and things are going well, that's fantastic, but also think about what it can look like and what your options might be in case you wanted to switch to midterm rental. Is that an option? In case you want to switch to long-term rental, would that be an option? Now, for me in my beach house, it doesn't really quite fit those criteria. And so kind of the third, fourth option might be looking at if things become really bad and if I need to sell, what am I expecting out of that sale? Like, what would that process look like? And kind of just gather information. Am I selling today? No, I'm not, but I am always aware and looking at the market and just understanding the pros and cons of continuing this as a business and renting it out as an Airbnb versus selling. And that is kind of a continuous assessment and a continuous plan B in the back of my mind. Ideally, my plan A is to have this as a long-term investment in terms of the equity gains, the loan pay down, and the little bit of cash flow, and get to enjoy it as a second home, as a beach house vacation place. That hasn't changed, but it'd be silly to not at least entertain the idea of, if things go poorly, what a plan B could look like. The same concept applies to your career. As you guys know, I'm in healthcare, which generally is a little bit more stable. But even then, it is important to continue building relationships, building skills, staying open and prepared in case things change. Even for making content on YouTube, I would imagine advertisers' budget may change in the next few years. And so who knows what's going to happen with how much income I can generate from this. It's more important than ever to not be reliant on just one thing and build optionality as you're going along. Build different skills, try out different things, and continue to explore different income streams, career paths, and just basically keep your options open. Part 2, let's talk about how I plan to double down on good foundational financial habits. The biggest one I'm planning on, honestly, is just to keep investing. I know it's boring and you guys have already heard it, but markets tend to be cyclical, and one way of looking at a downturn is just that things are at a discount and now is a great time to buy. I'm definitely not suggesting timing the market. I would not know how to do that, and I think most people don't do a good job of that either. But if you don't participate during a downturn, if you happen to sell off all your things and lock in that loss, you may be missing out on that upswing for when it does go back up. And just from personal experience as a millennial who has lived through, I don't know how many at this point of these downswings, staying invested throughout those times have made a lot of difference. So personally, I'm just going to keep dollar cost averaging as normal. I know not everyone is in the position to participate, and sometimes it feels kind of like a privilege to be able to even say this, and I totally get that. But whatever amount of money you can kind of rally during a downturn to start that process of automatically investing a little bit each month, that has the potential of really big changes long term. That part was all stocks and index funds. But how about for real estate? Just a couple weeks ago, we went to take a look at a duplex that could work if it was a little cheaper. And so we're still running numbers. And I think it's really important to keep that eye sharp if you have decided that real estate is part of your overall investing strategy, because the right opportunity might come when you least expect it. Now is not the time to check out, and I plan to continue running numbers regardless of whether the market is up or down. The second good habit I want to highlight is auditing your expenses. Every so often, maybe once a month, whenever you're kind of updating your bookkeeping records and looking at your bills, try to eliminate or consolidate any low value costs, things that aren't actually adding too much to your life. For example, if you are getting Grubhub and Uber Eats and whatever, just out of convenience, but not getting that much joy from that, maybe it's time to reassess whether that is where you actually want to spend your money versus saving it for something else. If the convenience of DoorDash is your thing, I am not judging. I'm just saying, if this was kind of unintentional and like a last minute, not well thought out decision, these are some examples of where money might be spent where you don't intend it to be. From a business angle, maybe you are overpaying for insurance. Maybe you are paying for software that you don't necessarily need or use. It's always good to have a built-in habit to reassess these things and look for ways to cut costs that don't add anything to your life. Having lower waste helps you be more profitable even if your revenue takes a hit. The third financial habit that I highly recommend is automating whenever possible. From a personal aspect, if you can automate like a paycheck to go be invested in your retirement account, save X, Y, and Z dollars in another account for your travel fund or for whatever fund, and then just have the rest of your bills be on auto pay, the less time you're spending managing money on a day-to-day level, the more mental space you have to take a look at the overall big picture and see if your money is actually being spent, invested, and saved the way you want it to be. And it improves accuracy. From a business / real estate kind of perspective, I rely on Baseline to automate the rent collection from a long-term rental. I am not manually going to collect this and making sure it's deposited. None of that. A lot of the bookkeeping, as far as importing transactions, that is also automated. It's automatically tagged to the right properties. Try to do as little as you can and preserve your mental space for making the decisions that actually matter. The last thing I want to mention in terms of financial habits is to do some tax planning annually, or maybe even more frequently if you are able to. Try to work with an actual CPA, or at least get advice, do a consulting call with them, and review your situation. Make sure you are optimizing your deductions. There are so many things that can be deducted, but only if you plan ahead accordingly, such as business travel or hiring your kids. They're all very documentation heavy, and it's important for you to understand the rules, understand what can be deducted and how to prove it, and get the right kind of documentation ahead of time. Having a tax strategy and optimizing for deductions can literally save you thousands of dollars, and this is often out of something that you already do. My third and final bucket of how I'm approaching this economic swing is positioning myself to make sure I am available and ready when opportunities present themselves. The first thing here is if you have any sort of side hustle, like if you are learning to invest in your first real estate deal, or you're looking to expand, you're already a seasoned person, whichever your skill level, whatever your kind of side hustle is, try to stay lean on these activities. You're still active and decisive and doing things because you want to be building those multiple streams of income and having that optionality, but you also don't want to burn out or lose sight of the bigger picture because you're so far down in the weeds. Look at everything you're doing, double down on what's working, but then decisively trim out whatever isn't helping you. For example, looking at my beach house Airbnb and the operations, in my initial years, I was just wasting so much time and money coming up with a new way to kind of solve the same problem over and over, until eventually I figured out how to systemize the whole thing and build a dashboard that works for myself. And now I don't have to think about it as often. Everything is automated. I get reminders at the right times. There are standard operating procedures for everything. After all, it is a business, so it was kind of ridiculous to not start with a standard operating procedure, but you learn. And I feel like that's an example of something that, yes, I had to invest kind of time and money into getting this dashboard up and running, but now it's paying me dividends in terms of saving even more time and money. Also, shameless plug, this is available for download if you're at all interested, linked below. To give an example of something that didn't pan out and I'm cutting out, adding a pool. We spent months talking to pool contractors, evaluating different options, thinking of designs. Ultimately, we decided in this current time, with all the economic uncertainty and travel being such an optional luxury thing that people don't have to do and can easily cut, we decided, yeah, it would have been amazing to have had a pool in the past couple years, but now is not the time to go add one. And so we paused our efforts on that for now to conserve both time and energy and money. This also applies to just saying no to work projects that drain you and don't help you advance. This also applies to making YouTube content and just saying no to collaborations that don't make sense, don't pay enough, aren't relevant to my audience. Because when you have extra time that is protected from all these side hustles and things, you have that extra margin to think clearly and make good decisions, especially with investments. I wouldn't trust myself to make a good financial decision if I was running on fumes all day long. My second thing in terms of like staying open to possibilities and opportunities is to keep learning, staying informed, but not doom scroll and not fall into the scams. I want to follow policy, rate, and market updates, and also just generally what is happening in the world. All of that is important regardless of whether they're enjoyable to learn about. But I also want to avoid doom scrolling and be super mindful of what kind of content I'm consuming. Because good decisions come from awareness and knowledge, but not anxiety. And there's going to be a lot of noise out here. Scams really thrive during these uncertain times because people are acting out of fear, out of a FOMO, out of wanting an exit out of whatever this terribleness is. And I get that. They want some sort of a hope and a different way to play in the game. There are absolutely going to be scammy opportunities that are specifically preying on disenfranchised folks who just want to be out of the system, high earners because they have money, and also emotional investors that may be acting out of fear and just wanting to bet on a dream. Watch out for that. Obviously, you have to find a way to keep learning, and so you have to figure out how do you be open-minded, but critically assess each piece of information, be aware of the conflicts of interest. Why is this person telling me all these things? What is their point of view? What are they trying to do? That obviously includes me, and I hope you're critically assessing what I'm saying too. The third thing I'm thinking about is keeping my capital access open. Partners or potential partners who have previously expressed interest in working with us, we want to stay in open communication with them and continue to build on that relationship. The second piece is having good credit. Because when opportunity comes, capital access will be key. The last thing I want to focus on is investing in relationships. This includes contractors, peers, mentors, potential partners, vendors, not in a LinkedIn lunatic kind of way. It's not meant to be slimy and transactional and salesy, let's build relationship and network in a weird, crazy LinkedIn people way. I think of this as putting yourself out there and giving help first. And this can be in terms of offering help, introductions, advice without expectations. That level of trust will make it a little bit more likely for someone to think of you when the time comes. The best example for this in my life is YouTube, but I think you can apply this to just people you meet in real life too. When I make my videos to share what I've learned, make a free downloadable thingamajig, most people will just take whatever they need and go build their thing, which is amazing. This is how it's meant to work. And it's also exactly what I did. Most of you are not clients, and that's really how it should be. But the reason I think a few people end up reaching out either for a quick consulting call or for my templates or whatever, which by the way, I'm really thankful for, I think more so for the level of trust that you have in me. I think it's because I have shared enough that they can now see how I think and resonate with what I'm doing. And that only gets built with time, with a lot of effort, by offering help first on the internet for free. Beyond that though, strong relationships with your cleaners, with your landscape person, your neighbors, meeting new people, networking with peers, that brings a new perspective and it brings you lessons that other people have learned, mistakes they have made, challenges that they have overcome that you can now learn from without going through the same thing yourself. It's also funny how a lot of opportunities or big breaks or whatever, a lot of these things come together not from strangers. It's often a group of people that were already in the same network somehow. They just haven't found how to collaborate together yet. In a nutshell, good people around you make you smarter, more resilient, and more likely to see an opportunity that you may not have seen yourself. So these are all the things I'm thinking about as I'm navigating the current times. I guess I'm just mostly doing what I already do. I'm not panic selling. I'm not panic buying. I'm really basically staying the course. If there are any major changes that lead me to sell my properties or quit YouTube, quit my job, or get a second, I don't know. If there are any major changes like that, you guys will hear about it. I will definitely be sharing that, any updates. But for now, I'm just going to continue some good habits, continue what I'm doing, and see what opportunities come up. I hope you're having an excellent day, and I will talk to you again soon. Bye.